Ladies and gentlemen, good day and welcome to Expleo Solutions Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from EY LLP Investor Relations. Thank you, and over to you, ma'am.
Thank you, Michelle. Good afternoon to all participants in the call. Welcome to the Q4 and full year FY23 earnings call of Expleo Solutions Limited. The results, press release and investor presentation have been already mailed to you, and you can also see on the company's website. In case anyone does not have the copy of press release and presentation, please do write to us and we will be happy to send you on the mail. Representing the management today, we have Mr. Ralph Kellison, Chairman and Non-Executive Director, Mr. Balaji Vishwanathan, Managing Director and CEO, and Mr. Desikan Narayanan, Chief Financial Officer. Mr. Balaji will start the call with a brief overview of the quarter gone by, which will be then followed by Mr. Desikan, who will be getting into detailed financials, and after that we will open the floor for Q&A session. As usual, I would like to remind you that anything that is mentioned in this call which gives any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with the risk and uncertainties that we face. This risk and uncertainties are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual report, which you can find it on our website. Having said that, I now hand over the call to Mr. Balaji. Over to you, Balaji.
Okay. Good afternoon, everybody. Thank you once again for joining our earnings call. Glad to be part of yet another quarterly earnings call from our side. Glad to also inform you all that finally, we have crossed the line from an amalgamation and integration legally as well. Even though as a business we have been working as one India for a while, legally now we are merged and all the entities are together from effect from 1st of April 2022 onwards, and that's what you would have seen in the consolidated reports as well. So glad to announce that there is also details of the amalgamation scheme in the press release that we have sent out. On the business front, I'd say that we are, the outlook is quite positive. We are still seeing quarter-to-quarter growth, despite all the headwinds that everybody is talking about. We are having a close watch, but at this particular point of time, I would say even though there are some larger engagements which are, not getting closed on time, but from an overall pipeline and from overall business activity, we haven't really seen much of a slowdown per se in most of our geographies. And, we continue to see, positive traction. We are, whatever investments that we made and the decisions that we made on investing in digital, investing in the latest skills, and also the investment that we made last year on acquiring a capability on data governance and, the data quality piece is helping us in our growth. And that's something which you could see in our geography wise split, where we can see US once again in the double-digit numbers as well. We continue to invest in training and upskilling, and this year, once again, last year we went on a little bit of a slowdown on graduate hiring. This year we are once again doing a significant amount of graduate hiring similar to what we did in 2021. Likely to add a little more than 500 people over the course of the year for training on specific skills and capabilities that we want to get up where we see demand in the market. We continue to focus on our costs, and that's something which you can see in our improving margins as well. Quarter to quarter, I would just like to add that we had a one-time engagement in one of our engineering clients for the work done in the previous years. Where we were working on getting some of the payments which were to be done for the efforts that we had taken, which were not agreed earlier, but the extra efforts were deployed in the previous years. But, after a lot of negotiation and persuasion, we managed to get some resolution. And that was the close to around 28 crores of which we got in the last quarter of the calendar year 2022, which is the third quarter of this financial year. And during the course of the year, the total amount that we got from the particular customer for resolution is approximately 41 crores, out of which 28 crores was in the last quarter. And that's why, technically the numbers are showing lower than what the previous quarter numbers are as one India, as one integrated company. But from an overall business perspective, we are still growing at close to 9% quarter on quarter in terms of overall business and also in terms of the margins as well. And finally, last but not the least, we are also happy to inform that the board of directors have recommended a final dividend of rupees 50% of the share value for the financial year March 31st, 2023. So that's a quick update from us from a business side. I will now pass it on to Desikan to go through the numbers.
Thanks, Balaji. Good afternoon to all. The long wait ended now, and now we are one India entity, and also the dividend is also declared. So I will walk you through the consolidated numbers of the One India financials. We'll start with quarter-on-quarter performance. Of course, quarter-on-quarter, the revenue for the quarter ended around 231 crores against 240 crores in the previous quarter. Our profit before tax stood at 39 crores compared to 77 crores in the previous quarter. As mentioned by Balaji on the one-time impact of around 28 crores in the previous quarter, for the purpose of apple-to-apple comparison, removing this impact in the previous quarter, you will see a growth of around 9% in revenue, and PBT dropped by 20%. The major reason for the drop is due to the forex gain in the previous quarter. So in the previous quarter, we had 12 crore of forex compared to the current 1.2 crores during the quarter. So that had a greater impact on the PBT. We did see some increase in the DSO during the quarter compared to the previous quarter. This is mainly due to the collection delay. Of course, we received a huge collection in the month of May. This was expected to receive in this quarter. So if I look at, if I just apply this on that, we'll be around 90 days compared to 108 days what we have there. Now we'll talk about the full year performance of 22-23. Our revenue grew by 22%, that is 742 crores to INR 903 crores. The EBITDA margin is at 22.2% against the previous year of 16.7%. So excluding the one-time impact of 441 crores, we would have ended up with a revenue growth of 16% and EBITDA of 18.3%. Our earnings per share for the year is increased by 98%. We end up with the EPS of 86.27 from 43.61 last year. If I exclude the one time, the increase is around 36%. On the cash balance, we have around 155 crores compared to 179 crores last year. During the year, we have also parked some surplus fund, which is getting us the higher interest compared to the market in those countries, interest in those markets in the country. That's the reason you will see an increase in the other income. That's considerably because of this. So with this comments, I would open it up for the Q&A session.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have the first question from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Yes, sir. I just have two questions. One, if you could share a bit of a comment on your growth outlook now on the merged business. And second, in the past call, we had once mentioned that the merged shares would be about 14 million. But what I see in the release of the results, it's about 15.5 million. So is there any creation of treasury share or anything by any nature, or I might have done an error if in writing, either or?
Okay, I'll take the first question first. In terms of growth prospects, we normally don't make a forward-looking statement, but like what I mentioned, pipeline looks quite positive. The business activities are quite positive as well. There are some pockets which are showing a little bit of a sluggishness, particularly in terms of taking the time to make the decisions. But we don't really see a big systemic challenge there. So, earlier we were growing at 33-34% when we were only without the merged entity. Now with the size of the entity, we still think that we should be able to grow at low to mid teens, and that's what we have seen in this financial year as well. As the integrated entity, our growth is around 16.5%, and we think that we'll probably be there in that range, anywhere between the 10 to 15% range in terms of growth. And in terms of shares, no, the amalgamation scheme has not changed. It's still the same. Right from day one, we had announced that it will be a total of 1.54 million shares, and that's or 15.4 million shares, and it continues to be the same. Jessica, do you want to add anything?
No, that's true. The earlier thing we had 1.02 crores shares, and we issued now 52 lakh shares, and it now total up to 1.55 crores. That's the thing, and it's been there from the beginning. That's the same thing we've been continuing there. We didn't issue any other share.
Okay, must be my error. Thank you very much, sir. Welcome.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We have the next question from the line of Pooja Ahuja from Monarch Network Capital. Please go ahead.
Hi, thanks for the opportunity. So firstly, I wanted to understand, you mentioned that you are expecting 10 to 15% growth. Last quarter, if I'm not wrong, you had suggested 15 to 20% growth. So what led to this kind of change even though you suggested that the outlook is quite positive?
Yeah, Pooja, good question. So like what I mentioned, that there is some amount of slowdown or sluggishness, but it's not a systemic one. And like what I mentioned, we are expecting it to be in the mid-teens to the high teens is what our expectation is. It's not changed significantly, and now the scale is also very different, because earlier our numbers were in the range of around 130 to 140 crores in a quarter. That's what has been there between the 100 to 125 to 130 crores is what our numbers are in a quarter. To currently where we are at close to 230 odd crores in a quarter. So both the scale and a little bit of a sluggishness is what is making us say that it will probably be in the range of around 10 to 15%. But the expectation is that it will be in the mid to high teens.
Okay. And is it possible to give this quarter's number in terms of what was for the listed entity and for the unlisted ones?
Actually, we don't have it. We just consolidated. Maybe I can check and come back to you on that, because currently we have made a consolidated number and we have done that. I can check and come back to you on.
Sure. And thirdly, just wanted to understand, Europe has seen a sharp decline this quarter. Is it because of the one-off revenue that we booked last quarter, or is there something else?
Absolutely, yeah. That's the reason. That's specifying.
Sure, understood. I'll join back the queue, ask more questions. Thank you.
Thank you.
Thanks for that.
The next question is from the line of Udit Bukaria from Catamaran. Please go ahead.
Yeah. Sir, in the past you had mentioned that your employee headcount, including subcontractors, were in excess of 4,000 in FY22. So when I look at the presentation today, so can you help me reconcile, like, what is the correct number? What is the number for FY23, including subcontractors? And secondly, during FY23, how many freshers did we hire?
So our current headcount, including contractors, is about 4,030 or 4,040. That's where we are at this particular point of time. And we have close to around 150 trainees as of March 31st. Currently, we are running at close to around 240 trainees. And we expect that we will hire anywhere between 550 to 600 trainees during the year.
And what would be the similar number, like, at the end of FY22?
FY22 was close to 3,850 or 3,850 or 3,900 in terms of total headcount. We have added around 190 to 200 headcount in total, because some of the engineering projects don't depend on headcount, because these are all primarily manufacturing, engineering, and project management. And in last year we did not have any trainee at all. So we did not do any campus hiring, or we did not do a concerted campus hiring. It was less than 100 or 110 people whom we hired from the campuses. But this year we are doing a concerted effort on hiring from the campuses.
Basically mentioned that we had a target of scaling our employee headcount to 10,000 people by CY25. So is that still on, or?
Yeah.
Okay.
Yeah, that plan is still on. Between organic and inorganic, the expectation is for us to get to a 10,000 headcount by December 2025.
Okay. Thanks a lot.
Thank you. The next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Hi, thanks for the opportunity, and first of all, congratulations on finally getting the merger done right. This is huge. The first question is on the EBIT of 200 crores. Is the impact of this one-off for the customer in that number? And if so, what is the sort of pro forma EBITDA measure?
Yeah, thanks, Rajesh. Thanks for it was a big task to get the merger completed, particularly when there are a lot of things which are out of our control in getting it done. On the EBITDA numbers, basically, do you want to answer?
Yeah, actually, if you look at the thing, it's around if I reduce the one-time impact of it, it will be around 158 crores. So it's what we spoke about the yearly thing is that impact is around
41 crores in total.
41 crores, yeah, sorry, 41 crores. So that's the thing which will be which is having that. 158 crores is the number.
Okay. And then the Q3 one-time customer payment that you got, I assume it was in the private entities, not in the public entities.
That's right. Yeah.
There is a
from the engineering business. Okay. It was in the engineering business. Yeah.
And lastly, housekeeping question, Jessica. So, out of the cash came down quite a bit this quarter, and how much of that is at the parent school level versus what you're keeping here in India?
See, as mentioned, out of the 155 crores, over and above, we have in parent company, we have parked around 446 crores we have parked in the parent thing. So if you add that 46 into 155, that will go up to
201.
201, yeah. That's the overall number.
Got it. Thank you, guys, and I'll get back in the queue.
Sure.
Thanks, Rajesh.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, hi, Balaji. And basically, congratulations on getting the merger done. So, am I audible?
Yes, sir.
Yeah. Okay. So, Balaji, just wanted to sort of think about probably next 2-3 years now. So at the time of merger, the thought process was to significantly increase the share of offshoring as from the group level, and India being a very significant part of that strategy. So if you can give some sort of a midpoint check on where we are on that, and how does the next couple of years look on that point. And in that context, if you can just share what was the revenue of the group last year versus this year, the overall period, and what is the expectation for this year in terms of growth?
Okay, I'll probably try and split this into two. The first part on the offshoring. The overall offshoring revenue from what it used to be in the earlier quarters as just the Chennai-based entity was in the range of around 37 to 38% of the revenue coming in from offshore. But now with the merger of all the entities put together, considering that other unlisted entities were primarily delivering offshore, are now the offshore revenue or the on-site revenue, which is coming from other countries outside of India, is in the range of around 20% from the 37 odd percent that we were at earlier. And in terms of group revenue, listed entity, the erstwhile listed entity had close to around 18%. Now we are in the range of around 28% of only the pure group revenue, where we are only a delivery center. But similar to what I had mentioned in the past as well, there are a couple of customers where the group is doing all the account management and engagement in Europe, but still getting reflected directly with us. If you include that, it will probably be in the range of around 40 to 41%.
Sorry, I think I should have clarified. I was asking the overall size of the revenue for the parent in 2022. Okay. Yeah. And how was the expectation? And specifically on the engineering side, like what portion would now be offshoring? Because I remember in one of the earlier merger calls, we had said that we were in the low single digit or mid single digit, and the aspiration is to get to 20-25% over the next 3-4 years. I believe that call was in 2021 at the time of proposal of this merger. So any numbers that you can share, where are we from that standpoint in terms of offshoring share, and how do we get to that number of 20-25%, and when do you think we can get there?
Okay, I'll probably take the second part first, and then we'll ask Ralph to talk about the group financial performance, even though I know it is better to hear from Ralph. On the engineering side, the offshoring has significantly increased, and that's the reason why, as a merged entity, now the total contribution from the group is in the range of around 28% from the erstwhile 18% that we were doing. So the engineering piece, which was in the single digits in 2021 when we started this particular journey, is already in the range of around 15 to 18% right now, and it's only likely to grow.
Yeah, Hi everyone. Probably just a restatement from my side. And I think what I already confirmed in previous calls, even what I can confirm in this call, is that we may see good and steady growth for the group and across all the different business segments, especially even at the engineering side. I think for the last financial year 2022, we even have communicated, I think, roughly a growth of 26-27%. And we can even see, even in the first quarter of this year, that we had, as a group, very healthy growth rates, especially coming from larger engineering customers, the larger engineering segments in Europe. At the same time, you probably even are aware about the more macroeconomic climate here in Europe, and what is even now presenting roughly 50% of the revenue that we have shared even in the investor update here. We see that the GDP is probably around 1 or 2%. From a technical perspective, even Germany is now in a recession after 2 consecutive quarters of negative growth. And we still see good and healthy demand on the one hand side, but as Balaji said, we see a little bit of slowdown in decision making from customers. And this is even why we are, and why even Balaji was giving a guidance there for the entity. But overall, I can confirm that even Expleo Group is growing, with healthy and growth rates across all the different businesses.
Okay. So again, just on this engineering part, Balaji, on this part. So I think last year, FY22, we did about 194 crores in the engineering business. If you can share what we did in FY23, and in terms of this number of whatever FY23 engineering services that we've done, still this 15% seems, 15-18% what you said, seems to be not very clear, because as far as I remember, we were doing $700-800 million in terms of so from the parent point of view. So this number still seems to be a bit low. So I'm not able to understand properly maybe
The total offshore revenue from the group is revenue contribution from the group is at 27% right now. Earlier we were at 17 to 18% till the last quarter, when we were looking at only the erstwhile listed entity. Now as the merged entity, we are at around 27% of our revenues coming in from the group, purely from the group. And the other one which comes indirectly through the group is in the range of another 13-14%. So total would be in the range of around 40%. So that's what I meant when I said that,
Yeah. No, I understood that part, but I was specifically asking that, I think which you also answered, maybe I got it wrong. At the time of our call during the merger, I remember that it was shared that the offshoring portion in the engineering services is very small.
I got the point, Rohit. Yeah, just to clarify that, that's what I was saying, that the offshoring component of engineering has started growing from 21 itself, because there was a concerted effort. And that is the reason why when at the merged entity, the overall number is higher, because the engineering component offshoring component of engineering is higher. And similar to what I had mentioned, our expectation is the group's revenue contribution by 2025 would be in the range of 40 to 45% from the current 27%.
Okay, so maybe Balaji, I'll request if I can, I'm not able to circle back on a number, maybe I'll reach out separately and understand it.
Yeah.
Sure.
Thank you. A reminder to all the participants, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Sugandhi Sood from Incred Asset Management. Please go ahead.
Yes, hi. Thanks for taking my question. So, I just wanted to follow up from where the last participant left. If I just adjust your unlisted entity revenues for, and I'm making taking a guess at what the number for the list would have been in the fourth quarter. But if I just adjust for that 41 crores of one-time revenues that you have reported, it seems that the invested business is flattish to slightly down. Could you give us an idea about, how the non-BFSI testing has done and how the engineering has done, and what's the outlook for those two separately?
Sure. So, the overall testing business as such, that is the overall quality assurance business, as what we used to call it as, which is not testing alone now. It includes software development, it includes low code, no code, RPA, and a whole lot of other stuff as well. That business has grown between last year to, that is 2022 to 2023. That is March 2022 to March 2023, to the range of around 23%. And the automotive business has grown. The aero business has declined a little bit. And the transportation business has just started because we did not have much in 2022, and most of the businesses have only started now. So overall, from a growth trajectory, the technology services business has grown in more than 20% range year to year. The automotive business has grown, not to the same extent, but the aero business has slightly declined from where it was earlier. And that was primarily because we had a significant amount of on-site presence for one of our Aero clients outside of India, which was generating a significant amount of revenue, but not so much in terms of profits. But profitability has not changed much in terms of the overall construct. Yeah.
It's just the non-engineering business, the vertical-wise color that you've given for the
technology, automotive, and Aero are engineering. Technology services is what I mentioned is the non-engineering business. Sorry, Ralph, you wanted to add something?
I think we will see. I think when you look at the growth, I think they predominantly come even into Expleo from the Aero and from the automotive segment. And there, from embedded and electronics as well as we see it in mechanical and mechanical product engineering. I think this will be, especially from the larger European markets, the driver for the better or even offshore growth from our perspective.
So also, on your margins, if I look at your gross margins, especially, there's a 5 percentage point decline in gross margins, and the headcount has not gone up, and it's referring to a presentation that digital competence has increased. I know that there are significant savings on the other OpEx, but there were also one-off costs last year that there was some technology transfer costs of 15-20 crores in the engineering business. You shared this in one of your earlier calls. So, what is the outlook on gross margin, and billing rates? And with respect to that, would you like to, reiterate or, update your EBITDA margin guidance of, 16 to 18% for the merchant fee?
Yeah. So the overall margins, I'm not sure where you're seeing a decline. It hasn't really gone down.
I'm just taking the employee costs. I'm just looking at the employee costs as a percentage. They have about 5 percentage points for FY23 for the combined business.
Okay. So we also have, similar to any other technology companies, we also have a contract employment that we do for some of the short-term projects as well. So overall, from a direct cost perspective, it has not changed much. And so even though we have not added too much of headcount, the direct cost proportion has not changed much. And from an EBITDA perspective, we had indicated earlier as well, saying that we will be in the range of 15 to 18%. And this year, despite the one time, if you take off the one time, we'll still be at around 18.3, and we expect that we should still be in the similar range of 15 to 18. We don't expect any significant change from that range at this particular point in time.
Subcontracting, how much would that be as percentage of sales?
It ranges. It depends on the demand. It depends on the season as well. Overall, for the year, it will probably be in the range of around 3 to 4%. But it's not the same every quarter.
Yeah, that's helpful. I just hope that it's.
Thank you. The next question is from the line of Kshitij Saraf from Tusk Investments. Please go ahead.
Hi, thanks for the opportunity. Just one question on the technology capabilities that you're looking to add at the group level and what we can expect flow through to India, what sort of business we can expect. So basically, what are the capabilities that Expleo Group is looking to build on, and what can we expect as business coming down to the Indian combined entity?
So the expectation from the group varies by each industry unit. So from a technology business perspective, the expectation is around software development, DevOps, automation or hyper automation is what we call it, as to some extent data and analytics and AI. These are the kind of demands that we are seeing from our group and also from our direct customers as well. And for engineering business, it once again differs by the industry, auto and aero. The auto industry requirements are primarily in ADAS, AUTOSAR, and multiple other, car software and car digital engineering requirements. And from an aero business perspective, most of the requirements right now is on the avionics side rather than the aerostructure side. Primarily around what kind of design and stress testing and certifications and validation. Those are the kind of work that we are looking at, or those are the kind of work that we are seeing as a demand from the customers. Ralph, do you want to add?
Yeah, so I think on technology, as Balaji said, within bank insurance companies, I think we continue with the software quality competencies we have and bringing it more into the software development, business analytics side, including data. On auto, there's a lot even on software-defined vehicles, where we will definitely strengthen the integration into electronic and embedded capabilities with the technology capabilities, as it is becoming really a very software-defined play compared even to the aerospace or even aero defense, where we still see software more embedded in the product itself, but the product is typically not purely defined by software. So there we will even see a strong focus on design, structure, stress activity in the mechanical engineering field. This is, I think, it's really where we must make a good or create a good understanding between the characteristics of the different industries. And this is definitely different in an aero and defense segment compared to an automotive segment. And where we much more can see the shift into everything more or less software defined.
Thank you. That's helpful. And just on the deal sourcing bit, are we looking to have a special focus on a large deal team now that the entities are merged, and how much of it would be proactive from the Indian unit as opposed to business going through from the group side, the group deal?
Yeah, the focus is on looking at larger opportunities. That is a 1 million plus opportunity is what we typically call it as. So the expectation is that most of the engineering side of the business, the opportunities are larger and for longer term as well. The technology business by its nature have shorter, in terms of term, it's shorter engagement, but all the customers are anyway long-term customers as well. So our focus is to look at adding more in the 1 million to 10 million range. That's what if you look at our top 10 customer contribution after the merged entity, it's around 35% from the earlier 53-54% of the erstwhile listed entity. So that way, the larger size opportunity or larger size engagements have increased significantly from what it used to be earlier in the erstwhile listed entities.
Thank you, Anjan. I can be key.
Thank you.
And just to clarify, the last question, I think it was Mr. Panya. I think I just wanted to clarify. I just got the information on the subcontractor costs related one. So we have seen a significant decline from the 2022 to 2023, and that is one of the reasons why you've seen a lesser amount of cost there. So from close to around 21-22% contribution in 2022, we are in the range of around 15% in 2023. So that's the reason why you're seeing that the overall headcount cost is reducing, even though the number of headcount is increasing. So just to clarify, yeah, we can go to the next question, please.
Thank you. The next question is from the line of Harshil Setia from AUM Fund Advisors LLP. Please go ahead.
Sir, going ahead, so when we are targeting around 10,000 employees by FY25, is this on a combined basis?
Yes. It is on a combined basis, and it will be both, even if it's also with an expectation of something inorganic as well.
Okay. And secondly, sir, how much would be the current employees of the unlisted entity?
I think it's around 1,900 or close to 2,000.
Yeah, correct, Balaji. It's around 2,000. Yeah.
Okay. And in case of an inorganic acquisition, in what area are we planning?
There's nothing which is as a strategy right now. We'll come up with what we can do now that the merger is done, and we have some amount of time to think about it. But as of now, all our plans are only to look at similar to what we did last year, which is a small acquisition, which is in the range of 20-30 crores. That's what we have been thinking of all this while. The larger one is something which probably we need to think through now rather than we don't have anything which is already earmarked at this point.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Zaki Nasir, an individual investor. Please go ahead.
Sir, congratulations on seeing the merger through at last. It's been a long wait. Sir, you have mentioned we could have a 10,000 count by 25. Would that mean revenue growth would double from these levels, sir? That's my question number one. Number two, could you just elaborate on this 28 crores received from a resolution? Would that mean that if this had gone right, our profit would have been more by 28 crores? Or what would be the differential in profit on this? And we have given a dividend of 5 rupees. Expleo as a company would give a larger dividend. So would this mean a change in the direction of our dividend policy, sir? Thank you.
So going forward, we are not expecting the headcount growth will directly result in the revenue growth. It will not be the same proportion because there are multiple other factors as well. Where our group business, the transfer pricing policy, all those will also have an impact. But yeah, from 4,000 plus employees to go to 10,000 employees primarily would mean that we expect the overall business to double as well. That's our aspiration. I wouldn't say that it's the expectation. And on the question about the one time, the one time is the money that we have got. It's not money that we are expecting. So it's the money that we have got for work that was done in the previous years. But we had to negotiate for the extra efforts that we had taken during the previous years with the customer, and we finally managed to get that resolved in this financial year. It was not accounted for earlier because it was not certain. And that resolution, based on that resolution, we got a total of 41 crores during the course of last year. That is between April 2022 to December 2022, out of which 28.2 crores was received in the last quarter, that is the October, November, December.
So that will not, on a normalized basis, that would not affect the P&L, sir. Okay, that has boosted the profit.
That has boosted the revenue and the profit because since it came as a one-time resolution, it showed an increase in the revenue and it showed an increase in the profit as well. To the same extent because there was no cost involved in that. So it went, both the profit and the revenue went up by the 28.2 million.
Okay, so it would be safe to assume that our normalized profit for the year could be around 115 crores instead of 135 if you take out the effect of that 28 crores, sir?
Profit after tax?
Yes, sir.
Yes, yeah, in the range of around 110 to 115 crores, yeah.
Thank you. And sir, if I may, one small question, sir. Sir, after the merger, Expleo has under its wing the BFSI as well as the engineering. Could you just elaborate on how would you like the company to pan out by 25 with a higher headcount what would you see the engineering and how would you see the BFSI panning out, sir? Thank you.
So at this particular point of time, 75% of the business comes from the technology side of the business. We are not calling it as BFSI right now. So basically, we're calling it as technology services and engineering services. The technology services side of the business is currently at around 75% and engineering services around 25%. We expect it to be 60-40 in the next 2 to 2.5 years by December 2025.
And that would mean a higher margin of profit, sir?
No, it will be longer term deals rather than higher profits, because engineering business normally does not have the same amount of margins as what the technology business is, but it is, most of those engagements are longer term, so that way there will be more certainty.
Thank you, sir, and best wishes for the next 2-3 years. Thank you, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Aman Shah from GT Investments. Please go ahead. Mr. Aman, I have unmuted your line. Kindly proceed with your question.
Let's go to the next one, please.
As the current participant is not answering, we move on to the next question, which is from the line of Faisal Hawa.
Hello. Can you hear me?
Yes.
So, on various LinkedIn updates of Expleo Group, Germany, and your parent, that is, it is mentioned that we are growing at the group. It is growing at 25% revenue year on year, each calendar year, and that is like almost like €1 billion revenue. So if the parent can grow at 25%, and you are now saying that with the merged entities, the revenue has gone up, and so we will now grow only in high teens. So it doesn't really add up, because the parent is growing with much larger revenue, and it seems that that we are doing some extremely relevant work abroad. So how do you really explain this? And secondly, on one of the slides, we have mentioned that our digital revenues have now reached a quarter revenue of 100 crores. Is that right? Because that is like something really tremendous. It's like, almost 45% of our revenues is coming now from digital.
That's right. 42% of our revenue comes from digital at this particular point of time. We have not completely done the analysis of all the engineering businesses. Maybe it might go up a little as well, but yeah, around 42% of our business is coming from digital right now. And on the growth between group and what we are doing locally, Ralph, do you want to take the first this one on that?
Yes, I think as I already said earlier, there is the growth rate that you even have mentioned. This is what was confirmed and published from our side for the fiscal year 2022, for the calendar year 2022. This is the organic and non-organic growth that we have achieved for the group. We even see that we want to continue, and across all the business segments, this includes engineering, technology, and consulting. Across our key regions, the projection is to continue with a similar organic and non-organic growth. But even a significant part, even of the activities, has no direct impact on our offshoring and restaurant strategy, especially what we're doing from the consultancy side. So we can't do the one-to-one correlation that you are making between the growth rate of the group and the growth of the listed entity in India. But we certainly expect that we will increase with the growth in size, even to increase the share of activity that will be delivered from India from a group perspective. But I can't confirm that you can simply do a one-on-one correlation between the growth rate of the group and what you see in the entity there. So unfortunately, a little bit more complex in terms of portfolio mix by region, by capability, and by industry.
So Balaji, I was actually not able to understand because the line is generally bad, and because of the accent also.
No. So what Ralph mentioned is that we grew by around, the group grew by around 20 to 22% last year, which is through both organic and inorganic growth. And this year, we expect that the group will grow closer to the 20% mark. Once again, primarily through both organic and inorganic ways. And some of these engagements, which covers technology, consulting, and engineering, particularly the consulting business, is primarily run in the respective countries rather than there is not too much of scope for doing offshoring of that particular work. And many of these engagements, which are also acquired in the respective countries, also don't have too much of offshoring scope. Our expectation is that each entity will grow in the same range, but give or take what the local dynamics will be. Our local dynamics or what we are expecting is primarily because driven by what we are seeing at this particular point of time. And I wouldn't say a slowdown, once again, like what I mentioned, it's a little bit of a sluggishness, but hopefully, it should get revived in the next quarter or two.
Also, there's an increase in the employee cost quarter over quarter, and this is almost to the tune of 20 crores. So, why has that come in? And that's one. And are we taking any steps to retrain our employees to really use ChatGPT as an aid for programming?
So there is lots of efforts that are being done. On the cost part, I'll probably have Desi can answer that. On the retraining and training part, there is a lot of effort that is being done. So ChatGPT is a very small component of the programming element, which is going to now automate most of the programming or most of the coding, so to say, and also the algorithms for doing the search and other stuff. But considering our line of business, it's not a significant element, but we are training all our employees both through classroom, through platforms like Udemy and Coursera and multiple other engagements that we are doing. We are spending anywhere between 10 to 12 hours every month with many of our engagements on training and retraining and reskilling our employees, both through online mode and through the offline mode, because the requirement for what is going to come in the next 24 months, 36 months is going to be very different than where we are right now. Yeah, so that's one of the biggest focus areas for us. On the employee costs, Jessica, can you?
Yeah, overall, one thing is quarter to quarter. This quarter we had the revision. We do the revision on the calendar year, that is January. So that is one of the reasons which they have increased, and also we have an increase in the headcount. These two have contributed to the increase in the salary compared to last quarter to this quarter.
Thank you, sir. The next question is from the line of Aman Shah from GT Investments. Please go ahead.
Hello. Am I audible?
Yes, sir. Please proceed.
Yes. Yeah. Congratulations for the merger being successful. My question is on DSO, sir. So what we see in Q3 when the testing business was only the listed business, our DSOs for average would be around 78 days for a couple of quarters. And now on an increased revenue size, we see that to 90 days. Certainly the unlisted entities, because the offshore part is higher, so DSOs would be higher there. But how do we see DSOs now?
With respect to the technology business, it's a little different kind of business where we have more we deploy people and based on the hours and all these things. But in case of engineering, it's a little different business where we do more milestone business, and also we need to get the client information. All these things will happen. That takes a little time compared to what it is. So if I look at a range or a benchmark for technology, it will be in the range of 65 to 75 is something which is more kind of a reasonable range within which it has. But in the engineering side, it will be around 80 to 90. So both put together, if we maintain it around 85, it's a kind of a good kind of 85 to 90 is a good kind of a benchmark for us to maintain the DSO at that level. So that's the combination currently we are looking at for both engineering as well as technology business.
Okay. Yeah. So, second question is on if we see that the segment-wise division that we have given, the technology and then aero, automotive, and transportation. So technology will be essentially the testing piece across all these sectors?
Yeah, it is not across all the sectors. It's across the non-auto and aero and transportation sectors. So anything which is testing, I wouldn't say only testing, because the testing as a business has seen a significant difference from where it was earlier. So it includes all the non-auto, aero, and transportation segments. So right from testing, automation, RPA, low code, no code, software development, all of them are actually part of that particular complex.
Okay. Sure. Thank you, sir.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investments. Please go ahead.
Thank you to give me this opportunity. My point is there, in quarter 4, our employee cost rises by 20 crore versus quarter 3 of financial year 23. So why the 20 crore employee cost rises in this quarter?
I think just now.
Jessica just answered the part of that question. So just primarily because January is when we do the salary increases for all our employees across the board. And this year the salary increases was in the range of around 12 to 14% across the board. And the remaining increase is primarily because of the additional headcount during the course of the year, of what we have added during the course.
Okay. And sir, this in next 1 to 2 years, you are giving some top line guidance. I am not going into that. But can you tell what will be the margin?
I was only talking about the next 2 quarters, Mr. Naredi, not for the next 2 years.
Okay. And so what will be the margin?
We expect the EBITDA to be in the same range as what we had indicated earlier, which will be in the 15 to 18% range.
Okay. Sir, I am the shareholder of this company since last 10 years. I see sometime revenue go in the sky and sometime go in the land. What is the reason to so many variation in the top line and bottom line?
Can you be a little more specific, Mr. Naredi? Because at least for the last 8 to 10 quarters that I can remember of, we haven't really seen any significant decline in revenue. We have only been growing, and the growth rate might have been a little different, but at least I haven't seen a significant decline except for this time.
I'm telling about the growth, sometime 10 to 15%, sometime no growth like this. I'm talking.
So quarter on quarter of this, we have never grown 10 to 15%. Year on year, at least in the last
year to year only.
Yeah, year to year, we have grown in the range of anywhere between, in the erstwhile listed entity, we have grown in the range of around 30 to 35% in the last 3 years. And this year, as a combined entity, we have grown 21%. And if you take the one-time impact, we have grown around 16%. So I'm not sure as to, there has not been significant fluctuation, at least what we can remember in the last 10 quarters, 8 to 10 quarters. If you have any specific quarter that you are referring to, I can certainly come back and give you this one. But we don't expect that to be that volatile either. So that's why looking at what we have said, in the range of 15% is what we are looking at, and I don't see that we will have a huge fluctuation in that.
Okay. And so after merging of these all companies, what chances you are seeing in the company?
Significant, sir. That's why we mentioned about growing to a 10,000 people headcount in the next 2.5 years, which basically means that we have the potential of doubling our business in the next 2.5 years. But obviously, there are lots of other factors there, and that there is not a forward-looking statement or guidance per se. But the opportunity that we have in front of us is significant across all the four major industries that we are supporting at this particular point of time, which is banking and all the other diversified industries, and auto, aero, and transportation. All the industries actually have a significant amount of significant amount of growth potential, not just in India, but also across the globe as well.
Thank you. The next question is from the line of Mithun Ashwath from Kiva Advisors. Please go ahead.
So I just wanted to understand what's your strategy for the US, because you had one acquisition of that Lucid. How is that faring in terms of growth? And also wanted to understand in terms of your headcount, you mentioned the 10,000 employee target would be inorganic and organic. So how much of that do you expect from organic and how much from inorganic? Those are the first two questions, and I'll ask the next one after that.
So Lucid has been doing exceedingly well, better than what we expected or what we had taken as a commitment when the acquisition happened. So that's why you see that the combined entity it's still contributing to almost 10%, little over 10% of the total revenue from Lucid. And when we acquired the company, they were doing the range of around 3 to 3.5 million. Now we are doing close to 5 million. We expect to do close to 5 million in this year. So that way, it's seen a significant traction in growth. And as far as US strategy is concerned, it's very similar to what we had mentioned earlier as well. We are looking at only tactical approach right now because US is a large geography and we don't have the bandwidth or appetite to go and target each and every state and clientele. So we have a certain focus on a couple of geographies where we have our existing customers, where we have our existing teams. And we will continue to do that till such time the group makes a big strategy into the US so that we can piggyback on what the group is going to do and help growing our business also in the US.
Sorry, during that after the pandemic, a strong focus on the group perspective on Europe. I think that is even translated in a good growth in the Europe, especially European markets, and what we see there in India. We have now we are working on the 2026 business plan. And from the group perspective, USA will play a significant part in this strategy. And I think even then the business in India will participate in the investment and the strategy that we are executing then for the US market over the next couple of years.
And on the headcount growth and how much will be organic and inorganic, it's very hard to say at this particular point of time as to how much will be inorganic, considering that we don't have a full-fledged strategy on what it's going to come from inorganic. But if we were to grow at the rate that we have been growing in the last 3 years, organically we should be able to get to close to 7,500 to 8,000 at least. But beyond that, inorganic is something which we don't really have a clear strategy or an idea at this particular point of time. That's still in the works. Still we are in the design mode rather than in the execution mode. So that's what it is.
Yeah, that's very helpful. Just one last one. So we've done Q1Q revenue growth of close to 9%. But you consistently have been conservative in terms of your guidance. So even if we grow at 3%, are you looking at 3-4% Q1Q growth for the next 4 quarters? So, or are we going to see very muted growth? So just want to get a sense. Are you being very conservative because 9% quarter-on-quarter growth was quite large in this March quarter, where a lot of IT companies have seen a little bit of a slowdown. So just wanted to get a sense.
Yeah. So, we think that our quarter-on-quarter growth, because last quarter we did sign up some engagements. We also had some on-site engagements that we got signed as well. We expect that we'll do the mid to high teens for the year. So considering this is going to be the first quarter for this particular financial year, we would probably be in the range of 3-4 is what our expectation is, given the current sluggishness. But if things change, which we expect that something will change in the next couple of quarters, then it could be even higher than that.
Thank you, sir.
I think we have reached our time. We have already set up.
Sure, sir. We'll close now. Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah, thank you. It's great to hear the kind of questions and the interest that everybody has got in terms of how we are integrating, how we are progressing, and how we are going to grow. Sincerely appreciate all the interest in Expleo. Given that now that we have merged and there is a larger entity and a lot more stability. Till now, we have been doing this quarterly investor calls. But going forward, we're looking at doing it once in 6 months. And if we have anything more important or any urgent update or any important update to be given to the markets and to the investors, we'll probably schedule a call, for that. But otherwise, looking at doing it once every 6 months, H1 and H2 going forward. Looking forward to your continued interest and your best wishes for continuing our growth trajectory. Thank you so much.
Thank you.
Thank you very much, sir. Thank you. On behalf of Expleo Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.